In today's video, I will show you a highly precise indicator you've probably never heard about before. This is literally one of the best breakout finder on a TradingView, and today I will build a super effective trading strategy with it. I will also backtest it 100 times with an initial account size set at $100 with 1 to 1.5 risk reward ratio. But before we start, please make sure you spend 1 second of your time and like this video, as it really contributes to the channel's growth. Alright, we're currently looking at the price of Ethereum USD on a 15-minute time frame, and the indicator I'm about to show you is called the Bjorgum key levels. Bjorgum key levels by Bjorgum, make sure you save it to your collection. Okay, before we get into the trading strategy, let's first understand what this indicator is and how it works. So this tool basically aims to capture 3 of the most significant points in the price action: breakouts, false breakouts or traps, and backchecks. These 3 points alone, if properly identified, can be some of the most significant points of movement in the price history of an asset and bring significant gains to traders if capitalized on. For simplicity purposes, we're not going to be focusing too much on these 3 key levels, because as I said at the beginning of this video, I will try to build a trading strategy with this indicator, and for that I will use 2 more indicators that will help us in finding the best trade entries possible. Okay, so let's actually understand how this indicator works. Okay, so for a short signal to be confirmed, the price action must cross and close below this key level of support. The key level of support is colored in blue. Once the price action does that, the lines will turn yellow, and this is going to be our entry price. As we can see, the short signal is only valid when the price action crosses both of these lines. For a long signal to be valid, the price action must cross and close above the key level of resistance. And when the price does that, the lines will turn from yellow to blue. As we can see, this is a really powerful indicator that identifies the breakouts with high accuracy. But if we take a look at some of these signals, we can see that some of them are quite bad. For example, a signal to go short right here could have resulted in a loss, the same as this long signal. You see, when the market is ranging, the chances of successful entry are pretty low. That's why we need to add 2 more filters to our chart that would help us to find better entries. So now let's go ahead and click on our indicators and search for our first tool, which is called Rolling VWAP. Rolling VWAP, this indicator was actually created by TradingView. Now let's access the indicator settings and make the line a bit more visible. And now you might be asking, how exactly is this indicator going to help us? And the answer is really simple. The VWAP will serve us as a baseline. So we're only going to be looking to sell when the price action is in a downtrend and the downtrend is confirmed. For that, the price action needs to be moving below the VWAP. This means that all these long signals that go against the prevailing trend wouldn't be valid. Also notice when the candlesticks are touching the VWAP, the market is usually flat. This is also a good way to eliminate potential bad trades. On the other hand, we're only going to be looking to buy when the price action is closed above the VWAP. This is a strong indication of an uptrend. So now we see that the strategy is much better and the signals are more accurate. But we still need to add 1 more indicator to the chart to prevent even more losses from happening. And the name of this indicator is Supertrend Oscillator. So Supertrend Oscillator by Lux Algo. And this tool is absolutely amazing if used correctly. But before we start using it, let's access the settings. And in the start section, let's get rid of some of the things we don't need. Okay, the strategy is finally complete. Now let's get into the trading rules. So here are the rules for entering a long trade. First, the price action must be moving above the VWAP. Second, we need to have a bullish breakout where the price action crosses and closes above the key level of resistance. Third, the Supertrend Oscillator's bar must be green color, and it also needs to break above this blue line. Let's actually make this line a bit more visible. As we can see, the conditions are met, and now we can safely enter a long position. Our stop loss can be set either at the VWAP line or at one of these levels. And for this strategy, we're going to be targeting 1.5 times the risk. Also notice when the price action does not close above the second level of resistance, the signal is not valid. If the trigger candlestick is touching the VWAP line, the signal is also not valid. And the reason it's not valid is because the price action is mainly ranging at these times. We can only enter a long position when the candlestick is fully above the VWAP. Alright, let me give you another example where a long signal is not confirmed. So here we see the price action crossed and closed above the key level of resistance. The trigger candlestick is fully above the VWAP. A Supertrend Oscillator's bar is green. However, if we take a look at the oscillator's line, we can see that it's below the 0 level. This indicates that it's too early for us to enter a long position. So in this case, we're just going to skip the signal and wait for a new one. Also, I'd highly recommend you to avoid candlesticks like this. These sharp moves usually result in a pullback. Okay, now let's understand the rules for entering a short position. First, the price action must be moving below the VWAP and the trigger candlestick is not touching the line. Second, the price action must cross and close below the key level of support. Third, the Supertrend Oscillator must be red color and the bar needs to break below this purple line. By the way, the purple line needs to be below the 0 level. And only when these conditions are met, we can safely enter a short position. A stop loss can be set at the VWAP line or simply at one of these levels. And we're going to be targeting 1.5 times the risk. Also notice when there is a low level of volatility in the market, the supertrend bars do not break below the purple line. And this is really good because we want to avoid these consolidation zones as much as we can. Okay, here is another example. We see the price action just broke below this key level of support. The price action is also below the VWAP and the candlestick is not touching the line. The supertrend bar is red and it broke below this purple line. Also notice how well our strategy predicted this sharp bearish move. We see the indicators lined up right on his candlestick. You can also try using a different money management approach. For that, you would close a winning trade as soon as the momentum in the price action is lost. You can close the position once the supertrend bar is no longer breaking below this purple line. This way you give yourself a chance to catch a really massive move. Okay traders, I hope you have understood the rules for this strategy. Now let's do our backtesting to see how effective this strategy is in different market conditions. Alright, so after 100 trades, the results for this strategy are really impressive. The win rate is 70% and we increased our account size by 331.9%. The profit factor is 3.5 and we had 8 consecutive wins against 3 consecutive losses. Also notice how small our maximum drawdown is. These results basically tell us that the strategy is quite reliable and we should definitely forward test it with the paper money. Okay traders, thanks for watching this video. I hope this strategy will make you a lot of money. By the way, if you want to see some more trading strategies for crypto, check out this playlist right here.